Good afternoon, everyone. Welcome back to the Trade Academy. I will be talking about how to use this indicator, our TDI indicator. This indicator is very useful. That is why I always recommend it to anyone that wants to trade btmm or smart money concept. Though smart money concept, you don't really need it, but with btmm, you will need it. So let's go into that. So this indicator, what we use it for mainly is to find divergence, in the market. Now, what is divergence? Divergence is when we have price movement on our chart going in one direction and on our TDI going in the opposite direction. How? Look at this. We see the price movement going in one direction. This is on our main chart, but on our TDI we can see the price movement going in the opposite direction. How do we plot it? This is how we plot it. We plot the highs. This was a previous high. This is another one. We plot the heights together. So the heights of our RSI, this the green indicator, and this one, we plot it together. We see it's facing down. Let me drop an image for a better illustration. When you take a look at this image, you see that the man standing here is not that tall, but the other man is taller. So we plot the height. So when plotting the height, and look at this angle, the hand, we also plot where the hand is for this man and the other man. So you see they are going in opposite direction. This is to tell you that there is divergence occurring in the market. So when using it with our TDI, with this our TDI indicator, this indicator here, what we are always after is we plot it from our, you see all these green lines, that is our RSI line, that we plot it from the height of this RSI and the height of this, connect it together, then connect this together. What do you see? We see price going in opposite direction. So when we want to trade, we trade the direction of our TDI. We trade the direction of our TDI divergence. This gives us an up movement, while this gives us a down movement. That means we are going to be selling. Now, to do that, we don't just jump into selling. So what we do is we look at our daily separator. This is our daily separator, that line, that is our daily separator. So we look at the high here. So this daily separator tells us that this is our yesterday's high and this is a new high for today. All this area down here is our yesterday's market. Now this is our today's market. So using this indicator, we are always after our yesterday's high. So what we do now, you mark your yesterday's high, connect it, draw a line there. So we see price doing what? Taking out our yesterday's high and closing beneath it. That is number one. Number two, what do we see? We see when we connect the highs, we see divergence occurring, and we connect the highs here, we see divergence occurring. So when we are connecting lows, that means if we connect lows down, we have to connect lows on our TDI also. But not right now, we are connecting highs on our TDI, on our chart, and on our TDI. So when you look at this market, what do you see? Once we have divergence, this was our yesterday's high. So at this angle, that is where we draw a line and look to pick our trade. This is always a sniper entry. So when you see markets returning back to test our yesterday's high, that is where you pick trade and place a sell trade, and you stand to make profit. So we begin to see price playing in that direction, selling. Now take a look at this. This was our yesterday's market, and this is our today's market. How do I know? Using this our daily separator line. Now when you look at this market very well, what do we see? We see another form of divergence occurring. So the first type of divergence that I showed was our regular divergence, but this one is going to be hidden divergence. How? Look at, connect the lows together. Now we are dealing with lows. Connect the lows together and connect these lows, the green RSI, connect them together. You see the lows here is in an horizontal form, whereas this is going where? It's going upward. This is to tell us that price will soon start pushing upward. So what do? We wait for price. And maybe you woke up in the morning and price is already here, so we wait for price to come to retest our yesterday's low. So towards here is the sweetest spot to place your buy trade. We are buying. Why are we buying? We are buying because market is the divergence is giving us an upward movement, so we place our buy trade. Then second reason why we are buying, this was our yesterday's low, so today market came there and created divergence. So this is hidden divergence, when your main chart is flat and your TDI is showing the opposite direction. So what do we see? We see price buying. So this happens often and often. So for me, this is not divergent. This is our yesterday's high, and this is our today's high. So this was Friday's market, Saturday. So when I connect my trend line, connect the highs together, you can see it's going downward, and we connect the highs here, it's also going downwards. It's going in the same direction. I don't pick this type of trades, but they are also profitable. Why are they profitable? Because we have liquidity sitting here, so the market makers have trapped some buyers here, so they will always want to push the price down. And moreover, the second reason why, if I want to consider picking this trade, I can see a kind of M-like structure. This is the first leg of our M, then the second leg. So since they've trapped people here, creating liquidity with these candle wicks there at the high of the day, of our previous day, means liquidity. So this type of trade, we pick it very early in the morning, around, though this comes late, but around maybe 7-8 o'clock Nigerian time. So once we see something like this, for me, I won't pick this because I don't have divergence. I'm talking based on this topic. If we are not treating divergence, I can pick this trade. But since we are talking about divergence, I cannot pick this trade. So, and in forex trading, we have to project our market direction. We project it. Why? Because when we write M, the last leg of the M, draw it downward. What did you see? You see it's coming downward. That means selling, falling. The market is falling. So now I can view something like that. So if I project this, I expect this market to sell. That is how we trade the forex market. We project the next movement. So what do we see? What do you see? We see the market selling, and it's selling very heavily. Now, this is what I was saying. This is our yesterday's high. This angle here, it was our yesterday's high. So through this daily separator, market came and took out the yesterday's high, creating liquidity at the top. So this is always a trade I can pick even without having divergence, but it's very important we use divergence. So once I see this, that they've created liquidity at yesterday's high and we have a close of candle below it, what I will do is the candle that closed below this liquidity, you can see this red candle that closed below the liquidity, I'll pick the midpoint of the candle. That is where I'll place my entry. I can see how the market did what? Sold very well. Now here is another form of divergence. What type of divergence is this? I already mentioned it in the previous one. This is hidden divergence. How? Looking at our daily separator, that line, that dotted line, and our yesterday's high, it's clear here. This is our yesterday's high. So connect your lines here. What happened? Look at our TDI indicator. Connect the highs from that green RSI. Connect it. What do you see? We see this on our main chart. We have the chart, the lines in an horizontal form, but on our TDI here, we have the line going downward. This is to tell us that market is going to sell. And why is the market going to sell? Because the market makers will likely do what? Close the market below our yesterday's high. So this area is where we look to pick trades. And when you consider picking trades, what do you see? You see the market selling. How the market sold to this place. Now this is another example. When we look here, we'll see yesterday's high and yesterday's low, and market came to test there. Given when you connect the lows together, we have a horizontal line. Then you also connect this together. You see, we are having a kind of up-like, kind of as if the line is kind of going up. What happened? Price pushed up. So these things are working. So at times they fail because there's no strategy that is 100%. Just like this, you can see this was our yesterday's high and this is today's high. What happened here? Market gave us, when we connect the highs together, this is horizontal, and when you connect the highs from our RSI line, the green line, connect them together, you see this is telling us market will sell. So this already indicates to us that we are to sell because the RSI is going downward. So, but when you place your sell trade, what happened? Market bought. This is not totally wrong. The reason is sometimes the market makers might decide to push the price a little bit and then send it down. But moreover, in forex, we always aim for M pattern to pick a sell trade, and right now we don't have a solid M pattern. So maybe they are coming to create a low, return it up, then send the price down. That is how the market works. So if you like this topic and you want to get more, please subscribe and share to your friends. Hit the subscribe buttons. Thank you.